Welcome to It's the Economy. Today we are putting the spotlight on the microfinance industry. Total loans disbursed by microfinance companies, that is banks plus NBFC MFIs, grew at a healthy 25% in the year ended March 31, and default loans, or what they call portfolio at risk, fell to 3.4% of total loans from 3.9% year ago. We are comparing March 31 to March 31. However, the industry was in the news on Monetary Policy Day for a different reason. The Reserve Bank governor warned, and I quote, "The Reserve Bank has come across instances of micro lenders and non-bank financiers charging high usurious interest rates on small value loans." And for these and other issues, I'm joined by Mr. Alok Mishra, the CEO and Director of MFIN, the Microfinance Institutions SRO. Mr. Mishra, thank you very much indeed for joining me. Well, first up, I don't know if the governor wrote to you as MFIN chief directly or to any of your members, but have you heard of anyone receiving this note of usurious interest rates?
Good morning, Lata. Well, the governor, when you read the statement on development policy, did say this, what you quoted. But if you were there when he did the Q&A post the policy, and he has very clearly said that it is not a system-wide issue, either in banks or NBFCs or NBFC MFIs. And there would be, if there are issues which are seen in individual institutions, that will be taken up by the Reserve Bank supervision directly with them. And to answer your first question, when you said that have the Reserve Bank written to us directly? No. Reserve Bank has not written directly to us, but we know that with few institutions on the supervision, while they do the supervision, annual or biannual, they are in touch with them, looking into their pricing policy and all that. So it is just what governor said was very precise and prudent, and we support it.
Okay. Well, actually, although the governor said these are isolated instances, they have gone after some of the NBFC companies also, gold loan company and IPO financing companies. So it looks like the Reserve Bank is now very keen on ensuring that well-laid rules are not, not followed. Yeah. So do you, as an SRO, have you all also gone ahead? Should we expect that some instances may come, like we found in the NBFC's gold loan companies?
That's a good question. And on this, when we look at whatever Reserve Bank has done in the last few months, I believe you're referring to that. Those are issues beyond interest rate. There are other risk management and corporate governance issues. And on that, our stand is that if you read the Omnibus Framework, Reserve Bank has said that SRO is an ally of the Reserve Bank of India. And my stance to Reserve Bank has been that within our limited sphere of responsibilities, we will go a step ahead in ensuring that nothing goes wrong on corporate governance and risk management, though we have a limited role and scope to play compared to Reserve Bank of India. And when you say that whether such things can happen, well, I cannot rule out the possibility. But by ensuring that our members, those who are members, and all the major players are our members, we, through our various external checks, credit bureau checks, through third-party evaluations, we try to ensure that these incidences don't happen.
Okay. And we thanks for that. Yeah.
Sorry.
Yeah, sorry. No, got it, sir. I wanted to come to the other issue of loan quality. It's heartening to say that your portfolio at risk 30 days past due has fallen to 3.4% from 3.9%. We got a slightly different set of data when individual small finance banks announced their Q4 numbers. My colleague Abhishek put out some data that H2 bad loans for many of them, Credit Access Grameen, ESAF, many of them was higher than it was in the first half. So is it a mixed picture? I mean, year on year, as your data shows, it is improved. But half year over half year, it looks like many people have reported higher NPAs.
Yeah. So, Lata, there are two parts to it. On the data part, you rightly said, because when we monitor the credit quality, we look at it at portfolio at risk figure, which is not traditionally overdues of bank, which is portfolio at risk. And the typical metric which I track is, one is month on business, that how much seasonality the loan has run and what is the credit quality. And the second is the time bucket. So the relevant time bucket which I use is 30 days, 31 days to 180 days. So what is the portfolio quality there? Because 180 days and above, these are old loans, they would have already been provided for.
Yeah.
31 to 180 days past due. And 31 to 180 days, from our micrometer data, which we have just released, the data is that for the industry, it is 2.1%. So if you include the data 0 to 30 also, it might go to 3% or something like that. Because 30 days, 0 to 30, 1 to 30 delay, I don't count much significance
Okay.
because they are
No,
recovered.
so
But
1
on
minute.
your
I'm sorry to
Sorry.
interrupt, but I got that data. In fact, in the MFIN data, in all buckets, the year-on-year figure is very good. Whether you look at 90-day, whether you look at 60-day default. I mean, 90-day default is the normal definition of NPA. Even over there, 31st March 24 is less than 31st March. I think it is 2.4 or something. Yeah, there it comes. 2.4 90-day days past due loans. It's only 2.4. A year ago, it was 2.8. So that's very clear that portfolio at risk is improving. But that is the individual cases that we got of small finance banks. All of them showed H2 worse than H1. So I'm just asking you if, this rural distress issue is there and therefore this is a mixed bag.
Yeah. So, Lata, I would, on this point of rural distress, because nowadays a lot of people are talking about it, let me say that on rural distress part, in pockets there can be. And when you compare individual institutions H2 to H1, there are localized issues also. For example, as you know, in last H2, our institutions suffered in Punjab due to Karja Mukti Abhiyan, which has now been contained.
Oh.
Similarly, in Tamil Nadu, there were some issues related to floods, I think. In Kerala, there were some issues. So these are, if an particular institution has a particular focus on a geography, and then there are localized events, there can be cases where H2 is higher than H1. But for us, the pan-India figure is more important. And as you rightly said, if the pan-India figure is improving, that shows the new loans are showing good quality. That is an area of comfort.
Okay. Yeah, I mean, this after all are only some SFBs that, we have collated. We have not collated banks here. We have not collated NBFC, MFIs. These are just individual 10 banks, 10 SFBs, where the H2 is remarkably more stressed than H1. Let me come to the cost of finance. That seems to be a problem for all banks. I mean, we repeatedly see advertisements of banks trying to solicit deposits at higher and higher cost. So are you seeing that likely to be a roadblock if your guys are also raising money at higher price?
Well, see, in our case, the banks and SFBs also do microfinance and they raise deposits. But typically, large banks, their rates are stable. Small finance banks, I think you are basically referring to when talking about deposits. And there also, while we see some competition or advertisement, but I think that's a feature of the game and that's a feature of their model because their lending is also a little higher because their portfolio is granular. It is not, because if you raise deposits at say 4%, your cost of fund is 4% of a traditional big bank, and it lends mainly to corporates where the interest rates would be, say, lending rates would be 12%, your margin is depressed to that account. But if you're raising deposits at 7%, 7.5%, and if you're lending, say, at 18% or 20%, that is compensated on that side. So portfolio granularity is also to be kept in mind when we talk about higher cost of funds.
So more generally, would you expect that because of this rising cost of deposits, there can be either pressure on margins or probably pressure on volume growth because, the cost has to be passed on?
I think the cost of funds in case of deposits has peaked. I don't see much of it is going beyond this.
Okay. Well, it looks like that. The Reserve Bank has not moved rates for a goodish bit now. Yeah. And there have been at least 2 readings of lower inflation. So we are all hoping that there are people who are actually even forecasting a cut. And today there was a research report on those lines. What is your sense of growth? Since you have your pulse on rural demand, do you see this 25% growth in loans continuing?
I think 20 to 25. This is, I think, or you can put, you can't be precise, but you can say 19% to 25%. That growth will continue because if you look at the data released by the government on the monthly per capita expenditure, that also shows there is a huge demand because the expenditure, the population which is to be catered by microfinance is huge, and we have a lot of pockets where microfinance has not reached. For example, one good part in the story of growth has been that in last year, the entire sector, including NBFC, MFIs, banks, etc., SFBs, we added 1.4 crores new clients to the sector. And that's quite a great achievement. And even the credit bureau data shows that around 25% of originations of microfinance loans in last year were to new to credit customers. So a huge untapped demand is there. So I think for medium term, that is 1 to 2 years, we can continue to grow at around 20%.
Okay, 20%.
Yeah.
Is there anything that, I mean, there is another budget coming up. Any specific demands either from the government or from Reserve Bank outstanding?
Well, the budget is the government's domain. So we have been in talks with Department of Financial Services, and we have talked about two things. One is we want a dedicated refinance facility for microfinance sector so that the ebbs and flows and tides of commercial bank lending are factored in, so that because it is a developmental sector, and if a refinance facility exclusively for microfinance is created, that will be great, especially for small players. And second is the sector has become huge in size now. Today we are at serving 7.8 crore unique borrowers. So we need, and this is all unsecured loans. So it would be good, and it will also bring down the cost of funding if a suitable guarantee scheme is there for the sector, so that for adverse events, some risk can be covered. So these are the two basic issues which we have talked to the government.
Okay, just a final word. Is there any specific region where you are noticing stress? I'm still going by that, individual SFBs which have reported higher NPAs.
No, I can't put a finger on it because there was 6 months back issue in Punjab which still lingers due to Karz Mukti Abhiyan in Tamil Nadu and all that. It keeps happening. India is such a diverse country. There are pockets which come, they prop up, and then they subsidized a natural course. Some linger on. So to label a geography as such would be not proper.
We have had an unusually hot summer. I mean, 2023 is the hottest year, and 2024, we are told by IMD, can be an even hotter year. So there could be rural distress. Do you think we can repeat this 3.4, or is there a chance that loans past due can go up?
No, I don't think there is a chance. Though I don't have empirical data on that. That comes after 45 days because May was the hottest period. So May data will come in July 15. There can be a few slippages maybe going into 1 to 30 bucket, but they will be recovered.
Okay. All right. So we're out of time. Thank you very much, Mr. Mishra, for sparing time for us and for giving us details from the MFIN survey for FY24. We wind up on Bazaar with a note that the mid-caps, of course, are racing ahead with a 0.6% gain, but it is Bank Nifty, which is the connoisseur today, the silo share of our eyes today, up over 50,000. Wrap up on Bazaar on that note. Chartbusters up next.